What's up, guys? Welcome back to another episode here of the BlockHash Podcast, number one resource for all that is happening across the emerging tech space. Be sure to like, comment, and subscribe wherever you listen to or watch the show. Today, I'm joined by another wonderful guest, Mitchell. He is the core contributor over at Sierra. We're going to learn about Sierra, what they're doing here in 2025, moving into the new year with their liquid yield token, what that means in particular. And yeah, we're excited to learn more about them today. So Mitchell, welcome to the show. Pleasure to have you on. How's it going?
Oh, going great. Thanks for having me, Brandon. Really excited to be here with you.
Likewise. Pleasure to have you here and excited to dive in and really uncover more about what you guys are doing at Sierra. Before we do that, we'd love to learn more about you too. Everyone's got an interesting story getting into the Web3 space. Would love to hear yours and maybe what's kind of led you down this path and eventually to Sierra.
Yeah. Happy to start there. I was doing my master's back in 2017, 2018 in UBC in Canada, and started working on like a master's research paper on crypto. Ended up joining the Bank of Canada, the central bank here, for a couple of years as an economist, and then moved over to the crypto industry full time around 2020, late 2020, basically, early 21. Worked at a crypto exchange called Woo from their early days, and then was there as their ecosystem lead or head of ecosystem until the end of 2024, when I left and started working on Sierra.
What would you say is maybe the core mission for what you guys are doing over at Sierra? Like what's the best high level definition that you can kind of give for people in terms of what you guys are focusing on?
Yeah, I think really simple terms, it's a savings product, really simple user experience, really focused on simplifying kind of the way yield is earned both in DeFi and in RWAs, and then creating a token that is very useful across DeFi and DeFi. So it's not just about savings in dollars and earning yield. It's also about being able to use this token across a bunch of different ways that you use stablecoins already.
Let's talk about that, because I think a lot of people might be new to what a liquid yield token is. They're new to a lot of things in the space because it's moving so fast. There's always new innovation, new technology, new terminology. So maybe a little bit, what is a liquid yield token, what that means here in Web3 and crypto, and maybe what kind of gives it some of that yield backing on the back end without having to lock anything in or being able to stake anything in particular, like how some of those dynamics work.
Yeah, there's a ton there. So I think the very first thing to say is it's a terminology that we've come up with and something that we're trying to push towards the industry more. We use this term liquid yield token, or LYT, because we want to make a clear distinction away from stablecoins. So like when we think of stablecoins, I think everyone would agree they're pegged to a dollar. They may kind of fluctuate briefly around it, but generally speaking, they're pegged to a dollar. They also tend to have exclusively highly liquid collateral, pretty much like bank deposits, short-term treasuries, and USDC and Tether are the clear winners there. When I think of a liquid yield token, some of the characteristics that I think of are some form of intrinsic yield. So as the end holder, the value of my holdings is going up over time. I also think of it as stablecoin denominated. So in contrast with like Lido's STETH or Jito's Sol, which is backed by ETH and Sol respectively, these LYTs are typically backed by Tether or by USDC. So the underlying reserve is denominated in stablecoins. And then I think of it as a token. So you've seen a lot of these, some of them are really great, these vault products where you lock your funds up in them. And some of them may even actually give you a receipt token, but that receipt token isn't really utilized in DeFi or CeFi. It's more of a user experience where you go ahead and place your funds in there and they just kind of grow in value, but then you can't turn around and put it into a lending market or provide liquidity with it on a DEX or deposit it into a centralized exchange, things of that nature. So to me, those are like the core characteristics of an LYT. And then to the other part of your question, I would say there's a huge amount of variance in how different LYTs generate yield. So like I would bucket Athena's SUSDE product in there. The staked version, the one that earns yield, it intrinsically goes up in value. You can see that over time, the balance remains constant in terms of your number of tokens, but the exchange rate against dollars appreciates as the yield accrues. I think it's something around like 1.2 now, after being live for maybe a year and a half, 2 years. They earn yield from basis. So what is basis at a high level? It's earning yield from the gamblers and the speculators in the perpetual futures markets. So those guys are paying funding rates in order to be long or own a synthetic asset like Bitcoin, Bitcoin perps, or ETH perps, or Sol perps, or Doge. And then what this product does, and what others do as well, like Resolve, is they short the perpetual future, and then they maintain like a market neutral, or you may hear delta neutral position, by also holding the spot asset. And so you are insulated from moves up and down in the price of the perpetual and the underlying spot token, but you're collecting the funding rate, because typically speaking, people demand to be long, they pay a positive funding rate, and then that basically is collected by the people who are short the perpetual futures markets. So the Athenas, the Resolves of the world. There's other products that do over collateralized lending. So I consider Syrup USDC and Syrup USDT in this market. You could also put USDAI as another LYT token. That one does lending against GPUs and basically AI hardware, which I think is quite interesting. One that just launched as well is Neutral, which I'm really excited about. They do something similar to Athena, but they do basis, where they get extra yield by buying vesting tokens. So instead of buying like a liquid spot Bitcoin, they may buy like vesting ENA tokens, the Athena governance token, from VCs or whoever. And then that's kind of what they're posting or using basically to hedge the short put position. Infinify, I think, is another cool project. They use Pendle PTs. And I apologize, this stuff sounds super complex. But I think, like the takeaway basically is just that there's all these different yield sources. And maybe just bringing it back to Sierra, what I'm excited about is simplifying the back end, the yield generation side. So a user can understand what Sierra is doing transparently, because we can do any of these different yield sources, but the end user doesn't really have to make decisions about how these yield sources are being used. They can just understand the risks. They can observe what's happening in real time, but they don't have to navigate Pendle, buy PTs. They don't have to do the risk management around basis trading. They don't have to do kind of the counterparty underwriting in different lending protocols or lending arrangements. And so I think that's really the big step forward for Sierra.
Yeah, it's something I really like about it, because I don't think most people have the time to figure out and understand how to do all these things on their own on the back end. So having a front-facing token like this, I think, makes it a lot easier for them to find a way to participate and reap the benefits of doing so without having to do so.
Absolutely. And I would just add there, Brandon, it's not just about understanding and being able to do it. It's about responding to changes, because all this stuff pretty much has variable yield. And so sometimes basis is really good. Like when the market's super hot, that's a great time to be in basis. But then other times, like maybe right after the crash on October 10th, basis was actually negative. So you really don't want to be exposed to it. And one of the things we built with Sierra is basically daily rebalancing. So there's certain thresholds in terms of the maximum allocation to these different yield sources. But if the market adjusts such that one yield source is not attractive, we can kind of rebalance through our infrastructure into something that's maybe relatively higher yielding.
Got it. Got it. And what do some of these yield sources look like for Sierra? Like, are these other cryptos? Are these like dollar equivalents, or like where are you kind of pulling from? Is it like a mixture of these things? And then at the same time, like, do you do like a rebalancing over a certain period of time? And if so, like, do you have like a methodology behind that, or something that you're tracking or following, or that you created? I'm just curious on the back end how you kind of have the gears turning.
Yeah, great question. So, first of all, we've licensed our platform from a company called OpenTrade. They're like a core service provider to us. So, OpenTrade has built this yield as a service platform, and traditionally it was just for RWAs. We've kind of worked with them to incorporate DeFi yield sources as well. And you can think of basically each yield source as an OpenTrade vault. So, what Sierra really is a portfolio of OpenTrade Vault tokens. So one yield source could be over collateralized lending with Aave. We also do some on Morpho with Gauntlet. We do some uncollateralized lending with Wildcat and Wintermute, for example. We can do Pendle PTs. We are also looking at adding more yield sources over time. We have an advisory council that we could talk about more from a risk point of view, but in general, the vault infrastructure is pretty much agnostic to yield sources. So we could do like market making vaults like HLP. We've looked at structured products and earning yield through volatility in options markets. We've looked at doing like some of the kind of incentivized private liquidity deals or different, basically different yield opportunities that tend to be driven more by incentives. So Plasma had some, Turtle Club has some as well. We've looked at some things that are only typically available to like high net worth individuals due to having high minimums to invest in. These kind of I would call them like institutional offerings. Some prime brokers have them, some market makers have them. Basically, we can do any of these different things in each of their own respective vaults on the OpenTrade platform, and we can rebalance across them every day. Some stuff has a redemption period. Nothing we're allocating to has a redemption period more than a month, and the vast majority is less than a week. Some is even as quick as 24 hours, like Wildcat, for example. Um, but basically, yeah, we can add whatever we want, subject to a risk analysis. We have a risk framework, which is covered by the advisory council, and then it just takes a little bit of time on the Open Trade side to create a new vault, on the order of like a day or two. So it can really respond to new things as they come up pretty fast.
I'm also curious how regulation kind of plays into this a little bit. Sierra, I imagine, is probably something that's available globally across jurisdictions, but are there certain jurisdictions where maybe you have to follow certain compliance or you ran into regulatory hurdles? Because I know with yield products in a lot of countries, even the US for a while, it can be a little bit more convoluted, a little bit more confusing to navigate. Just curious if you had to kind of try and navigate some of those waters recently.
We've definitely navigated waters. It just with the way we've set up the issuing entity. So we follow a lot of industry standards, which basically means you're issuing the token out of the BVI when there's a yield component to it. That's what Athena does and a few others. Um, we don't allow any Americans or actually people from the UK to use the product. And in general, it operates a one token, a two tier model. So it's similar to Circle or Tether, where you and I use USDC or USDT every day. It sits in our wallet. There's no restriction there. You can buy it from DEXs, from centralized exchanges, use it in DeFi. But you and I don't mint USDC. We don't go to the issuer, a Circle or Tether in the case of USDT, and give them dollars and receive newly minted tokens, or go and take back tokens and burn them and receive dollars back. That's the same way Sierra works. So, in order to be a minting client or minting user of Sierra Reserve, is the issuer in the BVI. To be a minting user of Sierra Reserve, you have to onboard KYB. We do a background check. We check for like AML and kind of risks like that. We also screen the wallets that are minting and redeeming to make sure there's no like sanctioned funds. And we don't allow basically, they're called UBOs or ultimate beneficial owners of these minting entities to be from the UK or the US. Generally speaking, though, as long as you're outside those regions, you can go buy it on our website, buy it on a decentralized exchange, buy it on exchanges once it's listed on CeFi. So for the vast majority of users, the user experience is very similar to USDC or USDT. And maybe just one related point on this is that there's no staking the way you have to do with some of these other liquid yield tokens, where there's like effectively like a stablecoin type one that doesn't earn yield, and then a staked version that does. All users earn yield the same way, so it's just buying and holding basically.
And you guys, are you listed yet or soon, or what's kind of the timeline like that for you guys with Sierra?
Yeah, so just for context for the listener, we're recording this on October 16th. We are already live. We're deployed. We did a smart contract audit with Spearbit Cantina, had no major issues. The token's natively issued on the Avalanche blockchain, but we're working with Layer 0 to make it an OFT. Basically, what that means is you can move the token to Ethereum and then in the future to other blockchains. So it's live. It's not really open to kind of external users. And by the time you're listening to the podcast, it should be live. I would say our main kind of announcement will go out on November 1st or right around that time. And yeah, at that point, you could buy it on DEXs as the main liquidity sources to start. You could buy it with aggregators, so like CowSwap 1inch. You could buy it on Avalanche as the main blockchain, but in the future, Ethereum as well. And then soon you'll be able to use it in other apps. So like lending markets, Pendle, some vault curators as well. We're talking to the guys at Concrete. So a bunch of different ways you can use it in DeFi. And then with my background working at the centralized exchange WooX, we're really focused on getting it listed and accessible on centralized exchanges, fintechs, platforms like the neobanks of the world, especially in some of the more developing parts of the world. So looking at LATAM, we're talking to a centralized exchange in South Africa as well, focused on Southeast Asia too. Basically places where users just want a simple experience to save in dollars and then grow their wealth in dollars as well.
And then another question, how you guys, and I'm sure you've thought about this, but approaching liquidity when it comes to having it listed on these different exchanges and different places. Primarily, I know most people would hold Sierra and want to reap the rewards that come from doing so and earning yield. But if you had a huge mass influx tomorrow because it's super popular, that might put quite a strain on liquidity at the same time. Or if there's a large swath that wanted to drop it for whatever because of market reasons. How are you guys kind of approaching liquidity, kind of like bolster it and give it a big enough pool for people to play with at the same time?
Yeah, so we work with several institutional Sierra Reserve Mint clients. So they would come. So let's just say a lot of people want to buy it. The secondary market price, the DEX price, is above kind of the intrinsic price of it, the mint price. And by the way, the mint price updates every couple hours as yield accrues. So as a holder, your exchange rate when you buy or sell it should go up over time as the yield accrues. So let's just say hypothetically, the kind of mint redeem price is $1.10. Tons of people are buying it on LFJ, the DEX on Avalanche, and it's trading at 1.2. The market makers will come to us with USDC. They will mint Sierra, which happens instantaneously, and then they can go sell it into the DEX pool, and that pushes it back down towards the primary market price or the mint redeem price. And then conversely, if it's worth $1.10 at the mint redeem price, and for whatever reason people want to sell it, maybe someone's using it as leverage or collateral, and it was liquidated and it's trading below $1.10, the market makers will observe that. They will repurchase the Sierra out of the DEX pool, put USDC back in so that it goes back up towards the primary market price. And then they will come to us if needed, and they will request a redemption, which means that we will take USDC. We keep a liquidity buffer, a few percent of the supply. So if they're doing a relatively small redeem, we can just process that immediately. But for example, say it's a weekend and the RWAs are not accessible, we keep a liquid part of the reserves in things like Aave, Morpho, and we can just withdraw out of those and then obtain the USDC back and facilitate the redemption. And when the redemption occurs, the tokens that were sent back to us, the Sierra tokens, are burned. So the supply comes down and the USDC leaves the reserves.
And then you mentioned some of the partnerships with other centralized exchanges that you guys are working on. Any that you can talk about in particular, as well as maybe those in DeFi, wallets, any places that maybe we'll be able to find Sierra that we can kind of look forward to?
Yeah, so because the CeFi stuff's permissioned, like they have to kind of approve, and there's a whole process. Um, I'll just say that at a high level, the immediate goals are to get listed on a few centralized exchanges, and then the later on goals is to be used as a source of collateral. We're being really conservative there, especially after what happened on October 10th, but that remains kind of a goal of Sierra longer term, because that's really a big source of utility for stablecoins right now, and we're trying to disrupt, I would say, that use of stablecoins where all of the yield goes to the issuer, none of it goes to the holder. We're not a stable coin, but we see that use case by users being replaced by liquid yield tokens in the future. So yeah, I would say keep an eye out, especially maybe towards December, January, after Sierra's had a month or so to start growing. But on the DeFi side, because of everything's pretty permissionless, the very first thing we'll do is create liquidity pools. So on Avalanche, LFJ is the main one, and we actually will have some incentives on that pool. So if people provide liquidity there and help us grow the secondary market liquidity, they'll earn extra yield beyond just the trading fees. We'll do something similar with Uniswap on Ethereum. So people are really familiar with that DEX. That's how you can support secondary market liquidity. Morpho, so being able to borrow against it, kind of loop the yields, that kind of stuff that some more sophisticated users are familiar with, should happen pretty quick. Same with Pendle, splitting Sierra into what's called the principal token, or PT, and then a YT token, the yield token. That's something that's on our radar. I'm really into sports betting. I know we are just talking a little bit about the NFL before we got on. I want to work with a few crypto casinos to let their users wager in Shuffle. So instead of wagering in Tether or USDC, you could wager in Sierra. And what's nice about that is that your bankroll is growing over time as the yield accrues. So maybe you're lasting a little bit longer throughout the NFL season. But yeah, I think there's a whole spectrum of utility across CeFi and DeFi that we hope to have maybe in the first couple months onwards. But I do really think the product in isolation of just buying and holding Sierra is pretty exciting on its own right. Because you basically have a broad exposure to yield from DeFi and from CeFi, or DeFi and RWAs, without having to do anything. You just buy it, you hold it. You need to do your own tax advice as a user, but what we've done preliminarily is that it seems to be treated as capital gains, because you're realizing a gain when you sell the token, which may help from a kind of a more favorable tax treatment versus you deploying it into some protocol that pays you basically income, which is typically taxed at a higher rate in a lot of jurisdictions than capital gains. Not tax advice. I'm clarifying that right now, but like these kind of features around it, with like a really simple user experience and those kinds of things, I think stand alone as quite a good product. But yeah, the utility is a really big focus for us.
Okay, cool. And yeah, everyone check with your accountants, because everyone lives in different places and jurisdictions, and that changes for everybody. Awesome. No, that's really exciting and cool to see, especially with the betting and wagering part of it too. I think that'd be a fun integration for a lot of people, and you'd feel a little less bad about it too at the
Yeah.
same time.
Yeah, to me, people already bet in stablecoins all the time. I mean, you can check out my Twitter. I'm a big fan of Shuffle as a platform, and we're chatting a little bit with them. I just think that's a big use case of stablecoins, is that form of speculation. Even prediction markets, like people use USDC and Polymarket, for example. Very early stages here, but I don't see why you couldn't denominate the betting asset or the predicting asset in Sierra. And so you've bet, let's say, 3,000 Sierra tokens on a certain outcome, like the next election or whatever, and say you win the full balance of the whatever the tokens or the market is, but your tokens are also worth more because the yield is accrued. And I think that's really useful in markets where the odds are super low. Like you're betting on something that'll pay out like 4% 8 months from now. No one really wants to do that, because you're basically earning treasury rates. Like your money could be used better elsewhere. but you add in this intrinsic yield, which is actually what Polymarket and Kalshi have done. But we could support that for smaller prediction markets or do it in maybe a better way. So like I see a ton of, let's say, consumer apps replacing their integration of stablecoins with LYTs like Sierra.
Yeah, I was just going to ask about prediction markets. If maybe you guys are looking at partnerships with players like Polymarket, because people are very particular these days. Like it's one thing to bet on sports or to gamble, but people like to wager everything, especially in this space. Like who's going to be the next Bachelor on The Bachelor, or who's going to be winning the next election somewhere, or who's going to or what's the Fed rate going to be this month? Like people like like to wager everything. It's kind of crazy. But that'd be a fun integration for sure.
Yeah, to me, it's just like I'm a user of Polymarket and of prediction markets in general. I think they're really awesome products, and honestly, they are a form of speculation, but they actually have value because they tend to predict things more accurately than the media or than even some experts. So, like I see them as a big innovation in the crypto space. And I do see a natural innovation is to wager on prediction markets with a yield bearing asset because why not? I mean, I bet on the Canadian election from like January to like I think it was May or something. So my USDC didn't earn any yield for 5 months. Whereas like if Sierra is yielding like 7-8%, my total balance would have gone up by an extra 4% annualized. So yeah, it's just it adds up over time, and it sounds small, but as you start kind of holding bigger amounts or just saving more, I think it does make an incremental, pretty big difference.
Yeah, they've been surprisingly accurate, and I think it's just when you have something tangible of value to you that you're kind of wagering more than a simple like poker chip or anything like that. Then I think there's a little bit more stake in the game for you, so you think about it a bit more. So I think a lot of these different wagering and polling through prediction markets, especially like Polymarket, have been very accurate, and I think that's a huge part of it. And it's cool to see like timelines too of how people are voting or on something or wagering, and then how that changes when something happens in the market or a news cycle comes out. It's very fascinating market psychology.
Yeah, I'm not sure if you followed the Nobel Prize one that just happened where the woman won, and someone, I just read a thread on it recently. Someone was looking at like inspecting element of the updated website of the Nobel site that had like an image that was going to be published or something, and they deduced that it was her. I don't fully know all the details, but like they were able to predict successfully without insider information who was the winner like before it was announced. And so like the wisdom of the crowds through prediction markets, when you add this like financial incentive of being able to wager on it, it's remarkable. It's people are pretty innovative and ingenious once you put some like monetary reward to it. So yeah, I think they're here to stay. I think some stuff is a bit like not done well, but most of it I think is really good.
Yeah. It's an exciting sector, I think, of this market that I think will just continue to grow over time. It's an idea that's kind of been around for a while now in the space, but it's like really come to fruition at this point. And yeah, excited to see how that kind of has an impact on market understanding in the future and how people, wager and vote and predict things. And I'll be interested to see what they do when it comes to sports too, because it's that's my kind of arena.
Me too. I'm a big NFL player prop guy. So yeah, right now it seems like they just do the main markets like sides and totals and the spread. But I think the long run you'll have marketplaces where I can like provide liquidity. Because basically when you're betting most of the time, like with a sports book like a FanDuel DraftKings, you're using a market order. Like they're posting a price and you're taking it or not. And you're paying a spread, which is like the VIG or like the -110 odds. So yeah, I see prediction markets where it's on more niche things like a touchdown or receiver yards or something like that, where I'm setting the line that I want. Like maybe I want Genty over 75 rushing yards, but I'm setting that, and people can bet against me. And yeah, and then you do that with like a yield bearing token, and I just think that user experience is so much better than holding dollars on a DraftKings where I'm paying like 4% VIG to them, basically.
Reeling it back to Sierra here a little bit, just kind of wrap up the episode, just so we don't get too off track. Assuming all goes well with Sierra and with the listings and everything, are you guys planning on maybe another LYT at some point, or how do you want to like expand upon that going forward? Would it primary focus be on Sierra and just kind of growing it and amplifying it over time, or would you want to explore other possibilities?
Yeah, I'll give you a little kind of treat for your audience because they've listened this far. So I think in the nearest term, it's like distribution broadly. So partnerships, different ways to use it. We call that like token utility, and then expanding the different yield sources. So basically, like making more optimizations from a risk point of view, trying to increase the yield where possible without taking more risk, diversifying things so we're less exposed to credit risk, liquidity risk, smart contract risk, things of that nature. I think there'll be one token, like one LYT kind of in the longer term, because it really helps from a point of view of like concentrating liquidity. And when you have that, it makes it more useful from like a collateral type use case, which I see is quite important. But what's more exciting, I would say, is that we're going to be launching a governance token for the Sierra protocol. And I mentioned before that the reserves are very transparent, but how the reserve management strategy is set is right now subject to the Sierra Foundation's advisory council and board of directors. But once you have a governance token, we really see a world where the token holders of the governance token are contributing to decisions around like adding a new yield source, taking one away, increasing the kind of max allocation to a yield source. All of those kind of things could be subject to governance. Still finalizing kind of how that's implemented, whether there's some like delegation model, things like that. But generally speaking, we think like the people who are like engaging with the protocol, who are accepting the risks of the protocol and the token, should have the most influence over the type of risks it's taking, how the protocol is designed, things of that nature. And that to me is really important because there's not really many examples of these types of products which have so much flexibility in their design, but are also truly decentralized and owned by the community. And like that to me is, I would say, is our North Star. And I would say by like mid to late of next year, we should make some really important strides towards that.
Awesome. And then where can people go to keep up with everything you guys are doing with Sierra, learn more? Do you guys have docs? Do you guys have socials? Are you working on community, or where people kind of message you guys, hang out, jive a little bit, and learn about Sierra?
Yeah. So first of all, podcasts like this are fantastic resources, a lot of like dense information. So yeah, I hope you guys have listened this far and share this with your friends. We have a social page. So Twitter is the main one. The tag is Sierra is money. We have a website, sierra.money, where our docs sit, our blogs, the launch app page is there as well. So actually using the protocol. For the more technical people, I would check out the docs. I would say the blogs is a bit more of a accessible kind of way to just first learn about things. And then we have a Telegram group, a community channel where you can engage with other users of the protocol, people in the community. If you have specific questions, you can ask them there. But yeah, I would say check out Twitter as kind of the main announcements, or the Telegram group. Research more through the blogs, through the docs, through these podcasts. And then I'm on Twitter. My handle is WR_crypto. You can DM me or follow me there, and there'll be some other kind of updates over time on my Twitter as well.
Well, Mitchell, I appreciate the time today. This has been really great learning more about Sierra and what you guys are doing with liquid yield tokens, and exciting to see where this kind of goes here in the near future. So definitely keep us updated on everything, and let me know when you have new relevant information that's coming out or new listings. Would love to have you back on here in the near future to learn how everything's going and what you guys are kind of learning throughout the process and how you're growing. So definitely keep in touch. But in the meantime, take care, and we'll talk again soon. This has been great.
Yeah, thank you so much. Really appreciate being here, and we'll definitely follow up in the next couple of months when we have some more meaningful updates for you and your community.